When investors find themselves between a rock and a hard place, they often think the only way through that is by making the perfect call. It's a pressure they need not carry. We discuss more this week. Predictions, perfections, when it comes to investor, they're traps. Can't tell you how many times I feel the need to try to make the perfect call, the great call. How many times in conversations with all sorts of people, let alone clients, you hear that come up. And again, there's always something pulling on people. One of the first commentaries years ago that I wrote was entitled From Fear to Fear. And what I talked about within that is how people ping pong back and forth between fear that the market's gonna crater and that they're gonna lose money, and then the next minute they're afraid that they're gonna miss out as markets start to move up. And of course, if you're trying to actually more times than not buy low and sell high, those types of instincts are gonna be working against you. When that FOMO hits after the market's been running and you maybe should be pulling things back, it's telling you to double down, get in more, likely to your detriment. Before we dig in to some of the current environments, want to just highlight again an example of that that's in the written commentary that JP Morgan did, looking back on 2022 and now what's kind of happened year to date in 2023. Of course, last year, just about everything struggled in the classic sense of stocks and bonds. But in particular, you had some things struggle more. Tech, cyclical stocks, more growth-oriented stocks, while commodities, many did well, or certainly well on a relative basis. And so read a ton of articles coming in to 2023 about how inflation's going to be stubborn, it's going to be persistent, commodities are a great place to be. And lo and behold, what do you get here to start the year? But commodities selling off in Q1 almost double digits, while a lot of the other things from growth stocks to international stocks, despite the situation in Ukraine, put up positive double-digit returns. What's the takeaway? Is there some asset class we should be buying as a result of that? No. The point is that trying to predict is always something that's going to leave you feeling probably foolish in hindsight. Again, the key is be balanced and then rebalance. So what is the dilemma that's facing investors today? Well, a lot of this you're well familiar with, most notably the Fed and inflation. This week we had a ton of data come out about that. We saw CPI beginning to ease. It's consumer prices. We saw producer prices, PPI, decline even more. There's been a lot of people trying to interpret what that might mean. We also had the Fed minutes come out where we saw some of the discussions happening among members around how many more hikes that they should be putting on. And while a lot of the governors said, well, we're not really worried about a recession, a lot of their staff members echoed a lot of recessionary concerns. So you put this in this pot, and again, our first instinct is, well, what do I do? How do I handle this? What call needs to be made? And that's the exact wrong approach. What you need to say is, okay, what are these multitude of outcomes that could happen? And do I have something in my portfolio that's going to help me get through or even have something to help me succeed through those types of market conditions? Similarly, while inflationary data seems to be positive, there's a whole host of other issues, the fears of loss that people might be focusing on, whether it's the BBC report this week of China running simulations of targeting Taiwan, the Pentagon leaks around the dire situation in Ukraine, and many more. And so again, it's this constant tension and dynamic. And rather than pick a side, what you need to do, again, is to think it through your plan and your portfolio to design the right path. So pulling this together, what's going to come of the world's reserve currency? What's going to happen? Obviously, we hope for a peaceful outcome within the Ukraine, an avoidance of any conflict between China and Taiwan, but we don't know, and nobody really does. And so again, trying to focus on perfection, trying to make that great prediction is going to put an undue pressure on you and your portfolio that you really can't navigate. The good news is we've talked about before, there's a lot of things that can do well despite any of these outcomes, or maybe in each of them, and then others that, again, we can work through. Ultimately, we want three big takeaways or three reminders as you really hopefully step back, look at some of the positive data, inflation, Fed, that might be out there, some of the negative geopolitical that might be weighing on you. Call it out. What fear is tugging at you most these days? And then ask yourselves, okay, as to my personal situation, a little bit more what I can control. What do I need? Whether that's cash flow, some liquidity, what is my particular situation, not necessarily the situation abroad. Second is work through what emotional challenges do you typically face as an investor. Most of us have one of those fears that tends to pull at us more times than not. Which one is it for you generally? Which one is it for you today? And how is that not helping you make the best decisions? And lastly, is your portfolio positioned correctly to survive and thrive in various market conditions? This is the path through. It doesn't require perfection. It can get you to a place of success, not only within your portfolio, but just the day-to-day life of an investor, to be able to approach it with a lot more joy and interest, as opposed to that pressure and that feel of constant failure that so many burden themselves with. As always, we're here to help. Reach out anytime. Thanks so much.